So let's go ahead and jump right in. So most of you know me, but a few of you don't. So I'll just give a quick background. I spent the first 10 years of my career as a financial advisor. So I help people invest in stocks and bonds and mutual funds. And after about 10 years of that, I realized that, and that was 2002, I realized that real estate was way better than stocks and bonds and funds. So I switched to helping people invest in real estate instead. And so the company US Home Vault was the primary company for that. And obviously that's still operational today. That's how most of you know me. But in the last 7 years or so, we've done over 200 flips and over 500 real estate transactions. But about 3 years ago, I was looking at my personal portfolio and realized 96% of my assets were in real estate. And as a financial advisor, I was kind of embarrassed that I hadn't done a better job of diversifying. And so I started looking for investments not tied to the real estate and not tied to the stock market. And I really kind of became obsessed with that and went on a quest to find those passive cash flow investments for my portfolio. A few years ago, I'd created a company called Infinite Real Estate Solutions when I was consulting real estate investors. And then in the last year, I changed the name of that to Infinite Passive Assets to better describe what we're doing now, which is helping people create passive cash flow with numerous investments. We actually use about 7 different markets. So real estate is one market, small businesses is another market, et cetera. So, but that's what Infinite Passive Assets is all about. So with that said, what do we think is the best passive cash flow opportunity for 2023? Well, I'll tell you, one of the gurus that I follow, he manages over $2 billion in funds, including my own. He nearly is always right about the economy. And his predictions are that the stock markets will drop by 20 to 25% by the end of 2023. And his prediction that Bitcoin will be below 10,000 by the 2024 presidential election. And so obviously those are concerning numbers. Some people are predicting that these markets will be flat. Some are down. Not tons of people are predicting that the stock market is just going to take off and go crazy. Honestly, 2022 is difficult for stocks. And going forward, there's the uncertainty about the Fed rates, the inflation, recession, the war in Ukraine. And so that market volatility is probably not going to go away anytime soon. And that's why a lot of investors feel safer on the sideline right now. Now, the third one up here, real estate. I love real estate. It's one of my favorite investments. And the appreciation the past few years is crazy. But right now, most markets have seen a significant slowdown in sales, as well as a slight decrease in price. And with that slower demand and a potential recession looming, those prices could continue to decline. And so most investors, they don't want to buy a property that could be worth less in 6 months from now. So on the contrary, e-commerce is very strong. Salesforce, that company, they estimate that the e-commerce sales during the 2022 holiday exceeded $270 billion in the US and over 1.1 trillion worldwide. Incredibly strong growth. And even that's during a somewhat difficult economic climate. So the future for e-commerce is very strong. So what is e-commerce? Basically, it's anything that you buy online. And that could be Amazon, that could be eBay, Etsy, Shopify, Walmart.com, or a variety of other places. So pretty much anything you buy online is really e-commerce. And so why is it good for diversification? Well, excuse me, e-commerce business is not tied to interest rates. So while both real estate and stocks tend to decline when interest rates increase, e-commerce does not. Also, e-commerce is not tied to inflation. So even if there's inflation, people will still eat, they'll still feed their pets, they'll still do laundry, brush their teeth, and they need to buy the products that enable them to do all these things. And so inflation does not have very much impact on e-commerce. And third, it's not tied to the stock market. Just think about the last year. What did stocks do in 2022? And during the time where they were all down, e-commerce was up more than 10%. Again, So just a great diversification tool. So how do you invest in e-commerce? Well, as with anything else, I guess there's a right way and a wrong way. You could buy a course and learn to start your own e-commerce business, and thousands of people have done that. And I'm not saying that's the wrong way, but it's not even close to passive. And there's a lot of risk if you take that approach. And so there's a better way in which you have somebody else manage that for you. But let's do a quick hypothetical. And let's say you're going to start a burger restaurant. So you could try different recipes, different logos, different processes, different prices and different marketing in the hopes that you find the right combination that makes that small business work and work profitably. Or you could go buy a McDonald's franchise and follow the instructions. And that's kind of how I look at this model of e-commerce. Instead of me, trying to figure out how to do it, I would rather pay someone that's done it over 600 times and has had it work and they know what they're doing. So that's how we suggest investing in e-commerce, and that's by having a management company do it. So is it possible for e-commerce to work a lot like a real estate for investors? And the answer is yes. So think of traditional property management. Okay, compare your store, your e-commerce store, to that property. You own it, and you hire a management company to do all the work for you. That property manager, in the case of real estate, gets paid a percentage of rent collected. Well, with e-commerce, the management company, this is even better, they don't get a share of the gross revenue, they get a share of the profits. So they only make money when you make money. Honestly, I wish real estate property managers would do that as well. So what does the property manager do? Essentially, they're there to build and maintain your store for you. So they market it, they make sure it appears at the top of all the search engines, or excuse me, the top of the marketplace. They grow your store, so it makes sales and is profitable. And again, they only get paid a share of the profit. So the more they can make for you, the more they make for themselves. So they're definitely motivated to make sure your store is very successful. So what's the process? It's pretty simple. There's really 4 phases. The first one, you make an upfront investment to start the business. Second, that management company, they build your online business. And that just takes a few weeks. And then you have an operating business generating some revenue. And again, your manager is there every step of the way. The third phase is the growth phase. And I'll tell you, it starts a little slow. And the reason is Amazon has a probation period to make sure your store is legitimate and that you will actually deliver the products you sell. So after 3 months, that probation period ends, and they kind of remove that cap on how much you can sell. And that's when your sales start to grow rapidly in months, starting in month 4. And so that fourth part is maintain. At that phase, somewhere between months 9 and 12, your business has reached kind of a maturity and it's creating great cash flow, and it just needs to be maintained. And obviously that's what the management company does for you from then on. So what's the total time investment on your part as an investor? It's almost none. I mean, seriously, upfront, you have to start an LLC, open a bank account, and set up a merchant seller account with Amazon. And that's all you have. That's pretty much all you have to do up front. And then each month, again, all the sales revenue goes into your account, and then you pay the management company their share of the profits. So you pay that monthly fee as needed, and that's pretty much it. Is a very low time commitment. And as far as the financial investment, so it varies quite a bit from one company to another. I've seen them as low as 10,000 to get started, and I've seen them as high as 100,000. And we work with 3 management companies, and our favorite one is the one on the call here, Ecom Authority, and they charge $35,000 to have your site built. Now, in addition to building the site, you do need money for inventory, and the more inventory you have, the more your store makes. And I'll talk about that in just a minute. But just keep in mind, we also have investors who like to lend their funds for inventory. And so if you wanted to have more funds available for inventory to increase your revenue, you can do that. and your return on that, what you spend for that interest on that money, is usually 4 to 8 times what you pay for the interest. So helps you earn a lot more in your store. I also do have a contact for a business credit broker who can get you started with up to 200,000 of business capital at some pretty low rates if needed. So a couple options there for how to fund that inventory. So what's the return on the investment that you can expect? And again, it's based on how much inventory you have available. And so for each company, the net cash flow to you after the profit split is typically between 7% to 14% of the capital you have available for inventory. So for example, if you have 30,000 available for inventory, your monthly revenue would be 2,100 to 4,200. And so I'll kind of walk you through a quick example. So if you have 30,000 of inventory and you mark that up, let's say you 20%, and you sell that for about 36,000. So you've made $6,000 of gross profit on that 30,000 of inventory. Then after paying Amazon their fees and then splitting it with your management company, of that 6,000, you'd get between 2,100 and 4,200. So that's just kind of how you where those numbers come from. And again, these aren't exaggerated or make believe. I mean, these are just the simple math of business. It's the sales minus the cost of goods sold minus the operating expenses, and that's yours. So that's how we get to that number. And as you can see, with the if it's 100,000 of inventory, that number is even higher. So you're looking at 7,000 to 14,000 per month would be your share if you had 100,000 of inventory available. And you do that on an annual basis, take that times 12, you're looking at $84,000 to $168,000 a year of passive cash flow from your Amazon store. So the return on that investment can be just phenomenal. So one of the things I like about the e-commerce stores is, like real estate, you can sell it. So it depends on how old the store is and how much it's making and a variety of things like that. But in general, if it's more than 2 years old, that sale price can be anywhere, is usually between 4 to 5 times the annual profit. And if it's less than 2 years old, it's usually more like 3 to 4 times the annual profit. So for example, if your store's a year and a half old and it's making $10,000 a month, that's $120,000 a year. So less than 2 years old, you take that times 3 to 4, and you're looking at $360,000 to $480,000 for your business. And there's pretty much all the companies we work with, I mean, they have networks of people waiting to buy performing stores. A lot of times it's the large private capital funds that have billions of dollars that love managed businesses with strong cash flow. So it's kind of how that would work. So what's the best place to open your first store? Obviously Amazon, the largest site for e-commerce in the world. When you look at the future of e-commerce at Amazon, I mean, basically in the month of November, just a couple months ago, now 1 month, Amazon in the United States alone had 2.2 billion site visits. That is a lot of e-commerce. And this trend, I think I mentioned this earlier, but e-commerce has been growing at least 10% per year for 20 consecutive years. And that trend is expected to continue for at least the next 4 to 5 years, if not more. So it's been growing for a long time, and it's continued. The expectation is that it will continue to grow. And that's because if you think about how many people are going to stop buying online, going forward, not very many. If anything, there's people who still are just getting started, or maybe they've just bought a little bit, and as time passes, they start getting more and more comfortable with Amazon, and they buy more in the future. So there's just a lot of potential for the future. Everything points towards positive future growth for Amazon. So before working with any of these e-commerce managers, I did a lot of research. This is just a little snapshot of a spreadsheet that I'd created of more than 40 of these management companies that I've researched or investigated. I blurred out their names on the left-hand side. I don't want to say bad things about anybody, but honestly, the ones highlighted in red are the ones that I would not work with for one reason or another. There's a few of them that are yellow that I would consider. They had a couple of features I didn't care for, but I might consider them down the road. The ones in green, those are the ones that I liked. I think those are some good companies that do this. And there's a couple in white that I'm still researching. But the point is this: before introducing you to any of our favorites, we did a lot of research and a lot of due diligence. And any company that I recommend, I've already invested personally with them and got a store up and going. So got a store started. So I just kind of want to let you know a little bit about our due diligence before I show you anything. So with that said, why did we choose Ecom Authority? Part of it is the combination of the cost and the profit split. I mentioned there were some that were as cheap as $10,000. That company happened to be new. They were testing it to see if they could do it. Some of them were 100,000. I think that was way overpriced, but some of the splits are a little bit different. But I thought Ecom Authority had a very fair combination of cost and profit split. Plus the experience is great. Dan, I'll bring on Dan in just a minute, and he's been in this industry for more than 10 years. They've started and managed over 600 successful Amazon stores. They've also got more than 400 Facebook stores that they've started over the years as well. So over 1,000 e-commerce stores. That's a lot of experience. But the big differentiator, and this is where I've told a couple of you, I kind of compare, it's like two cars, one's a Camry and one's a Mercedes. I mean, they both are, four-door sedans with 4 tires and bumpers and windshield wipers, but it's some of the little stuff that's different. So a couple of little things that I like about Ecom Authority: their products are all manufactured in the United States. So there's no international shipping issues or no, Chinese manufacturing or anything like that to worry about. They only use name brand products. And that's huge. There's a lot of places on Amazon where they're selling, generic terms or, brands that people aren't familiar with. But Ecom Authority has name brands like Procter & Gamble, Sony, Vizio, household names. All of their products qualify for Amazon Prime, which is huge because with Amazon Prime, all those are available for shipment to be received the next day. And there's a lot of people that are Amazon Prime members that would only buy Amazon Prime products. And so by qualifying, it gives you a huge advantage over the competition. The last one, though, is pretty interesting. They have a 90-day inventory guarantee. And my guess is they probably never had to use it, but it's still nice that it's there. So one of the concerns that some investors have had is they said, well, gosh, Steve, what if I buy $50,000 of inventory and nobody buys it? Well, that would never happen. Ecom Authority has agreements with their manufacturers, like Procter & Gamble and Sony and whatnot, that if the inventory isn't sold after 90 days, they will buy it back. So there's no way that you would ever get stuck with any inventory that couldn't be sold. And so that's just a fantastic guarantee, something they have in their contracts that a lot of other companies do not. And again, usually inventory turns over much faster than that. The goal is to turn it over about every 30 days or so. But just in that off chance something doesn't sell, you've got that inventory guarantee. So those are several reasons that I like the Ecom Authority. And with that said, I'm going to introduce Dan, have Dan Cohen come on. He's the CEO and founder of Ecom Authority, and going to open it up to Q&A. And then when we're done with the Q&A, he's got a special webinar bonus that opportunity he's going to share with us. So Arvin, if you wouldn't mind making sure Dan can get on.
Yep, I'm here.
Ah, fantastic. There you are, Dan.
Hey, everybody. Thanks, Steve. Yeah, so I think I'm not sure if you guys can make me the host, but I'm thinking if anybody has questions, if you guys can make me the host of this, then they could ask in the chat box and I can respond to any questions that people ask.
Well, as I say, and I think they can unmute themselves and just ask out loud as well.
Absolutely, yeah. If anybody has any questions for me, please feel free. Steve obviously just did a great job explaining everything. Like you said, I've been in this industry for about 10 years. I've sold every type of way on Amazon. I've sold on all the platforms. I started by going literally door to door, going into stores with my phone, scanning items, and then buying them and repackaging them and shipping them off to Amazon. Graduated into wholesale. I've done drop shipping. So I've done pretty much every type of way of selling Amazon. So I really know the platform well. My team's really well immersed in it. And just from being in this space a while, we've built these relationships with big brands and distributors that we're able to get really good pricing on items for people now. And that's why we run these services because Amazon doesn't allow me, you're only allowed to have one account per person, which is why we do it like this. And also it just comes down to capital, right? I wish I had, if I personally had $50 million in working capital, I would do it myself. But by having a ton of stores connected to me, I'm able to leverage other people's capital and really just build out and sell as much stuff as possible. So yeah, I think like I said, that presentation really went over everything. I think it was a great job. And if anybody wants to unmute themselves and ask any questions, please, feel free.
Hey, I got a quick question. And is it Dan? Is that
Yes. Yep.
Dan? Hey, Brent Hoffer here. I've worked with Steve for a little bit. Quick question about, and Steve may have covered this already, but once you're up and running, what is the percentage of the monthly that you guys take, and what's the percentage that Amazon takes?
So great question. We do a 65-35 profit share. You guys take 65, we take 35. And Amazon charges fees anywhere from 8 to 15% per item, but that's already been taken out before we do our profit share. So that's already been done on that side. That's literally every sale you make, Amazon is already taking that out. Someone asked in the chat, how is the website created? We walk you through. We have an onboarding team that sets you up to get you started with Amazon. They asked how the products are selected. My team has the products selected. We already you're not going to be approved to sell in every single category right from the beginning. So a lot of times you're going to have to start out with one brand, and then your next store get the second brand and keep going from there. So we'll put items into your store based off of what your store is able to sell. And my team does all the product sourcing and the selection. And that's as well why we have the 90-day buyback guarantee, because it's really, we're putting our money where our mouth is, that if we're putting these products in your store and they don't sell in 90 days, we're going to buy them back from you. So how are the stores named? Doesn't make a difference. You can name it Dan's Store. You can name it, Goods Discount. Doesn't matter what you name your store. And they asked if there's any liability concerns. In terms of liability, you can get liability insurance if you want in your account. That's not an issue. You can always do that.
And just real quick on the naming, because I started several companies. I'm always really concerned about having an attractive, appealing name that people are going to like. But then when you go to Amazon to buy something, when you see the goods and services there, you don't really even, you don't see the names behind them necessarily, who's selling that. So it's really not that big of a deal.
The name is a non-factor at all.
Hey, Dan, Monty here. Couple of questions. One is the categories in which you guys put in each store. I know you mentioned you guys manage many stores, many categories. So I'm going to take a wild guess and say we're competing with each other. That's one question. The other question is the rate of return. What happens and what is your average rate of return?
So average rate of return is like 2 to 4% on inventory. And in terms of competing with each other, the thing is, we're buying these goods. So like, let's, for example, if we have technology with Amazon that we could see how much things are selling, how many units a month, right? So if there's an item that's selling 10,000 units a month, we have a rule of thumb where we'll never buy more than 30% of that item. So say 3,000 units. So if we space those 3,000 units, say across 20 stores of ours or whatever it is, we already are seeing what type of sales we're supposed to get. And it also, if we're selling TVs, and if a TV is $500 and we buy 1,000 TVs that we're going to sell, and you have $10,000 working capital, that's only 20 TVs, right? So that TV sells 3,000 units a month and you have 20 in your personal store, you're not really competing with each other. And at the same time, on Amazon, you're never going to have an item that no one else is selling either, right? So that's not going to happen. So it just comes down to our product selection of items that are selling well enough that that's not going to make a difference.
So can I ask a question? So then how do you, in that scenario, you talked about the TVs, you've got hundreds of sellers selling the same TV. How does it end up coming to my sales group?
Well, so we have, we're dealing with probably like 10 to 15 different brands that we sell. So we're selling a ton of different items, which means it's spread across a lot of different stuff, right? So that, there might be, out of 600 clients, we might have 10 clients that are selling the same exact item because we've got a wide range of products. And in terms of what's going to sell, Amazon's the one that dictates that. So what happens is when we put it into the Amazon account, when we ship it up to Amazon's warehouse, they have what's called the buy box, which means whoever is the first person on Amazon is the one that's going to get the sale. And they start to reward you more with the more aged your store is, the more sales you've had, the more reviews you've had, low return rate, things like that. So Amazon is the one that does the algorithm of how the sales are going to happen.
Understood. So then add on, who's handling the support and replies of questions to get the better ratings?
My team handles all of that.
Okay, thank you.
And just real quick, that's where I go back to that McDonald's analogy where, I could try and figure all that out, but man, I would much rather, buy into a system where they've done this hundreds of times and know how to figure that stuff out.
Is the 2 to 4% return that you guys were talking about, is that across the board, or does that fluctuate at all, or how does that work?
That was when I was talking about the return, that was like actual items, right? So like if we sell 100 units, you're going to get about 2 to 4 that get returned. That's what I meant on that.
Yeah, that's what I was referring to.
Yeah. So in terms of the actual return on your investment, we're seeing about anywhere from like a 7 to 15% net ROI for the clients.
Is that monthly?
That's based off of inventory order. So if you were to buy a round of inventory today and you bought $10,000 of inventory, we're basing it off of that individual purchase. If you were to buy inventory monthly, then your return would essentially become monthly, but we base it off of the inventory order, with your worst case being a 90-day hold. So that's how we base our numbers off of.
And for somebody that's just starting out, like how long do they usually sit on an inventory should they buy a $10,000 order?
Well, so the way I answer that is we have a 90-day buyback guarantee. So I tell people to always expect, when you're buying inventory, to expect 90 days, because that's just what your worst case is. But we have items, we've had clients that have sent in $10,000 inventory that is sold out in a day. Some of it's a week, a month. It's all going to vary, but I'd like to tell everybody 90 days just to prepare you for that.
And then the expectation is that in 90 days that you're buying it back at the value that I purchased it at, or are you giving the profit, keeping the profit, right? So like you're just trying to help somebody recoup their initial costs. Is that accurate?
Yeah, so like if you buy $10,000 of inventory and you sold $9,000 of it and you had $1,000 left, you could send that $1,000 left to us and we would buy it back from you at the cost that you paid for it.
Question. So, what is generally the cause of failure if a store is not successful? Basically, if they're all essentially the same, what would cause one to underperform?
Clients' credit availability. People that just go through things in life where you have $20,000 in inventory that you're buying something, and then you receive your money back from Amazon, but you went on a vacation instead, no money on your credit card, and you can't fund inventory anymore, right? Things like that happen. I see that happen all the time. And so I think that's really the main thing, is just the client's ability to have capital in their store is really just what's going to dictate everything.
Okay, so then follow up then, devil's advocate. So if, say, I have no money problem with keeping inventory, what's the what else could go wrong, basically?
I mean, I guess the main thing, right, is that we're selling on Amazon's platform, right? So it's their platform that we don't have control over. So that's the one thing that could always happen. You know, we could control everything on our end, our inventory, what we're doing, but we can't control if Amazon ever makes a change in anything on their side, not knowing what it could be. So I guess that's if you're asking for like the worst case scenario, that's the worst case scenario, is just not knowing what Amazon's going to do at any time because we can't control them.
Okay, thank you.
Dan Monte here again. So Amazon has gotten into the $5 subscription fee for prescriptions. Have you guys explored the niche of pharmaceuticals?
We have not, and yeah, we mainly focus on consumer electronics. That's our main bread and butter, and we're also tapping into like everyday goods like
Commodities.
like yeah, everyday commodity. Yeah, exactly. So yeah, that's what we mainly focus in.
Any plans to explore the pharmaceutical side? So if you
No,
decide to partner with any pharmaceuticals or anything like that or generics to get on Amazon.
it has not been discussed at all.
Okay.
Quick question for you. So Dan, how much say do the owners have about what will be available on their store?
So we control on my side what we're going to put into the store. If there was like a specific reason or for somebody to not have something in the store, that's fine, that we could talk about it. But in terms of what goes in the store, like we're the ones that control it. Like it might be a TV, a computer monitor, a vacuum cleaner, things like that. But yeah, we're the ones that are controlling those.
So if we have any problems with the products or just don't see that the return or something's going there, do we just call you to see if we can change it, or is that not even an option?
So again, that's a 90-day buyback guarantee, right? So if something's there and it's not selling at 90 days, we're going to be aware of it, and we would tell you, okay, this item hasn't sold out. We could ship it back to the warehouse and then give you the refund for that item.
But would you, if you had to buy it back after 90 days, would you then change and try different items?
So the client could, so the client could say, because right, realistically, right, the only way that you would actually ask for your money back is if you're just not running your store anymore. So realistically, what would happen is you would send it back to us and you'd have like $1,000 credit towards your next inventory that you're just purchasing again.
I think there's a question in the chat.
So the fee, it goes to our team. That's our onboarding cost. I tell people it's essentially like you're buying into a franchise model. Where you're buying into our expertise, what we've built, our team, our relationships. The companies that we're buying from are companies that if you were to call them up and try to buy from them, they wouldn't speak to you. If you said, hey, I had $500,000, I want to buy an inventory, they're not going to talk to you, right? But like if we're talking to them, we say we've got $10 million in working capital, we get into the door with them. So it's to get into our relationships and our business model that we've built out. And that's really, it goes for that in our team infrastructure.
And another way that I look at that, the upfront cost is, long term, you guys make your money on a share of the profit. But if the profit doesn't really start until months 6, 7, 8, 9, you guys can't afford to start dozens of stores for free and wait 6 or 7 or 8 months. And so again, sure, I'd love for your fee to be zero, but but realistically, you guys, a lot of the hard work is up front, getting things going, getting that momentum going. And so, that's my understanding of where a lot of that goes, is just the startup costs of getting it moving.
Exactly.
Could you show us an example of some of your stores, or like on a screen share or something?
So with Amazon is extremely strict on how you access stores. So Amazon only allows you. I could get one of my stores. I'll pull it up here. But Amazon only allows you to have, like I said, one store per household. So you can't log in to multiple stores at the same location, or there's going to be an issue. We do it for remote access for all of our clients. And so for you guys here, I could show.
Maybe not show the store, but is there a possibility we can see it's kind of like an average number?
I'm not sure what you mean by
I'm kind of
that.
I'm kind of interested in both, but some of the numbers side, but some of the physical things too. The visual things.
I'm not sure you mean by the numbers, but I will pull up a store here for you. This is the only store I'm able to access on my actual computer. So this is what the back end of Amazon looks like here, or this is what Amazon looks like. So as you can see here, today's sales, I'll show you the numbers here. This out of the way. So this store here today, you can see right here, drop down to 1. Today there was 98 orders, 123 units, sold $1,900 worth of goods. Today, for the week, sold 7,000 so far. Today's Wednesday. 450 units. Months I'm going to show. So for the year, for a full year to date, it's done $600,000 in sales, $28,000 units sold. For us to log, like I said, when we log into other stores, we have a whole system that we have to do to log in properly. So I'm not able to just do it from this computer here. That's just how Amazon is. Amazon's very crazy with IP and how you log into accounts. And when you guys would sign up for a store with us, we would obviously walk you through how to do that properly as well.
Hey, Dan, on that example where it was $600K for the year, do you know roughly what was the inventory or what was the capital that they put into that?
That client's at it's at like $50,000 a month capital.
Okay.
And how long has that store been running approximately?
18 months.
Okay.
You could scale the stores quickly. It just comes down to capital on your side, however much capital you guys have available that you're looking to put into it. By like the 3rd month, you could really scale them up.
Did you say that was $50,000 a month capital?
That's what they're at now.
And so what they made, what, $8,000 each?
What was that?
So what was their return on that? For the
So
year?
the average, again, averaging anywhere from like 7 to 14%. And that's net. When I say that number, that's net after all the fees and stuff.
Right.
And just to clarify on the inventory, so if it's 50,000 a month, I think Amazon pays every 2 weeks. Is that
Bi-weekly,
right?
yep. Amazon pays
bi-weekly.
Yes.
And so every couple of weeks you get your payments from Amazon, and so so if you had a credit card, you get hypothetically you had a credit card with a $50,000 limit. I mean you're paying half of it off every couple of weeks if you wanted to take that approach. So so when you look at a long period of time, it's like, oh my gosh, 50,000 a month. That's hundreds of thousands of dollars a year. No, that's 50,000 paid off. Buy another 50, paid off by another. So at any given time, your inventory, your capital that's being used is not exceeding 50,000. Hopefully that makes sense.
Yeah.
Hopefully I didn't just confuse them more than I clarified. Awesome. Any other questions? All right. Well, Dan,
A quick
I know that you
question
were.
on
Oh, sorry, go ahead.
Quick
yeah,
question.
quick question on refilling inventory. So, like mechanically, how exactly does it work? So, say I've sold out $50,000 worth of inventory, and I'm ready to like buy my next 50,000. How does that transaction occur?
So we would give you access to a portal that we have, and you could go in there and just place an order whenever you want.
Okay, and placing an order, it means what transactionally? Who's
Literally, you
paying
just
money when I place the order?
yeah. So you literally go in there and you type in, I want to buy $50,000. It'll send you an invoice, pay the invoice to us, and then we disperse the goods at that point.
Okay, so the money is paid to you basically, and then you take that 50,000 and then buy whatever inventory you think is of value to the stores.
Well, like I said, we already have the inventory. It's just basically assigning it. Yeah.
Okay, gotcha.
Quick question.
Yep.
Can it go into more depth of the working capital being in major credit card again?
Yeah. So yeah, if you have a credit card, you could buy the inventory with any credit card you want. So that's how you could buy the inventory anyway, credit card, wire, ACH. So if you have a credit card, yeah, absolutely you can.
Okay,
Well,
but
sir,
the
that's Miles then.
but the initial setup had to be through either a personal or business checking, though, right?
I didn't follow what you said there.
The initial setup of the account.
Yes, correct.
Okay.
All right. So Dan, I know and we can stay a little bit longer if we need to for any additional questions, but I know that you had an offer you were going to make for the people on this call for I think the first four.
Yeah.
I will let you go into that.
Yeah, absolutely. So we're going to do it for anybody that was on this call. For the first four people that sign up, and we're gonna cap them at 4. Included in your purchase of the store, we're gonna include $2,500 in inventory. So that means if you were to buy a store and you want to buy, say just for example, $7,500 in inventory, you would get $10,000 worth of inventory. So we're doing that for the first 4 people that are on this call that want to take advantage of that, and then we're going to cut that offering off. But we want to obviously, it's Wednesday night, you guys are on the call. Steve brought you here and you were interested, so I wanted to share that and give you guys something to look forward to with it.
Okay, I appreciate that. And so, what is the setup costs to get moving on?
It's $35,000.
Okay.
Dan, a few more questions came in the chat while you were talking.
The inventory is owned by your store. This is your business. We're just the management company, so you own the inventory and you own your store. It's not the same inventory across every store. It's spread out because again, we have a lot of inventory. We spread it out a lot across a lot of stores from what we have. I think that looks like it's it.
So I have another question on the inventory that you have that you're spreading out. Are you selling that to us at cost, or do you have some kind of a markup on it?
We give a pass through on the inventory.
Okay. So in that first 90 days or so with Amazon, we're expecting to have minimal sales, but what kinds of things can we expect in those first several months? I mean, it sounds to me like a minimal investment, say $10,000 is probably sufficient for the first 90 days because it seems like you're kind of capped at any kind of.
Yeah, I would say your first order probably $5,000 to $15,000. Then you could do say up to 20,000, and then after that, your third order is when you could scale to kind of whatever your comfort level is.
Yeah. So if you wanted to keep this moving well, what would you be doing? Would you be checking it once a week to see what your inventory is and to buy more inventory?
We would be telling you as well. We'd be updating you as things are selling. Obviously, you could check as well, but yeah, we'll be telling you when it's selling because our goal is for you to buy as much inventory as possible.
Right. That's kind of what I'm thinking. So if I had, a $75,000 line that I'm using, and we've only gotten it to 30. I'd want to have it keep going until we hit that level, so that I could get a better, get more cash flow.
Yep.
So could that be almost an automatic kind of a process? How does that work? Let's say you've hit you've sold out your inventory, or you've got something that's selling hot, and it would be good to replenish that. How does something like that work?
Yeah, so we would have an account manager, speaking with you and going back and forth about, hey, this is selling good. We have more in stock. Do you want to buy some? So we would definitely be communicating that to you if we have that.
Okay.
Dan, a few more questions came in on chat.
How are you funding the inventory you were holding prior to selling to our store? I'm not sure exactly what that means.
That would be the inventory that you're supplying to us, the pass-through.
How are we funding that?
Yeah.
Yeah.
So are you holding the inventory, or are you just ordering it direct from the factory? I guess
we hold inventory. Yeah. So yeah, we hold inventory in the warehouse. And we also do a lot of forecasting too, right? Like we know with X amount of clients that are buying X amount per month, we're forecasting how much inventory we need to purchase to meet the demand. So that's something on our side that we're
I think what they're asking is, let's say it's a Sony TV, is it going from Sony to your warehouse to us? Or
yes.
is it going from Sony to the Amazon warehouse
No, yeah, it's going from the distributor to us first, and then to Amazon. And then someone asked what's the communication model between the management team and the store owner. We launched a portal that we have that's all the communication is going to go through there, so you guys have full access. We're building out a support library, content, support desk management. You can hop on calls with the team. So the team is very interactive with everybody. Yeah, and just to go one step further on that, as a store owner, that was one of the comments I was going to make. Is you guys do have great communication. The weekly call where you provide updates. Again, you don't have to get on, but I do. I get on. I listen. If I missed it, there's a recording available within an hour. Every single Tuesday. Every Tuesday at 2 p.m. Eastern, I host a weekly call where it's like an open format for all clients that can hop on, talk about what's going on. We go over anything that's happening with the business and stuff. So yeah, every single week we have that call as well. Someone asked about, and do we offer financing? I don't offer financing for the stores. If you have someone that does it, I don't know, Steve maybe does, but not through me directly. Yeah, I may be able to do something for you on that. Let me. We'll talk about that a little bit later. And I think that's about it. Is that all the questions?
One more just
last okay. Was how many do you manage? 600 clients currently that we're managing.
And do several of those have multiple stores?
Some do. I advise against it. I think it's best if you have the ability to just scale one store. As much as I would like to tell you as a salesperson to buy multiple stores, it's in the best interest to just have one and put as much money as you can into that one store.
Okay.
Awesome. I think it looks like that is probably it.
Yeah, well, yep. Awesome. Well, thank you so much for your time, Dan. I appreciate that.
Absolutely.
For everyone else who had questions, if you guys want to connect with me, and anything else, if I can't answer, I will certainly get in touch with Dan and get an answer for you. And hopefully, in the next few days, at least you guys can move forward and take advantage of Dan's generous offer to get the some 2,500 of free inventory. So I look forward to talking to you guys about moving forward and about that. And if nothing else, everybody have a great evening. Again, thank you, Dan, and thank you everybody else for taking the time out on a Wednesday night to listen to a Zoom meeting. So thank you so much.
Thank you, guys. Thanks.
Thanks, everybody.
Thanks, guys.
Thanks.